What is going on, YouTube? It is ya boy, Lowedaddy, Lowedaddy, Lowstradamus, the Dollar Store TC. I'm the first there ever has been and the last there ever will be, so I guess that makes me the one and only. And whether you like me or you don't like me, you cannot get rid of me. Because HUMBL, our favorite company, just had their Q1 2021 earnings report, where some people said my jaw was going to drop through the floor, and I'm still waiting for it to drop. So let's go ahead and break this down, and really quick, let's dive into some of the things that were said on my last controversial video. Now, my last video featured a bevy of comments ranging from "you're not focused" to "please speak English" to one that actually encapsulates most of them, saying, "It's a new business. How do you expect revenues from a new business? Dude trying to drop the price, get himself some cheaps. Nope, buying more." Okay, hope you loaded up more at $2.90. It's at 90 cents today. Also, to defer that point, I am not trying to buy cheaps. I'm not trying to buy this stock. I'm not trying to short this. I don't even fucking know how to short a stock to begin with. I'm just trying to tell you what I see from an unbiased outsider perspective. Nothing personal against you guys. And then my favorite comment, really quick: overvalued. Don't worry, not shooting the messenger, shooting the guy who didn't do any DD. I don't have any rebuttal to that. I actually think that's hilarious. So good for you. Thank you. You know who you are. That actually made me smile when I saw it. So let's dive into it, guys. Two last things before we get started, and then I promise we're getting started. One, this is your friendly disclaimer that I am not a financial advisor. I'm an online marketer. I'm not legally qualified or allowed to give you financial advice. This is strictly my opinion and my opinion only. Please do your own research and your own investments that you make by yourself. And then, as always, please, please, please smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every time we go live, every time we drop a new video. We're making money up in here, which is every single day the stock market's open, folks, except for some days. Alright, so we're going to try a new format today. I realize that on mobile, these numbers on my website are almost impossible to see when they're on the video. So you can find these numbers from the annual report and the quarterly reports that we go over on my website, as always, at growthsaloon.com/growth-resources. Make an account, it's free. I'm not going to spam you. I'm assuming you guys don't want online marketing. Let me know if you do. But let's dive into it. Alright, so the basics of the balance sheet, y'all already know. Assets are going to always equal liabilities plus stockholder equity. Let's start with our assets. You can see they're all current assets, meaning they can be liquidated in 1 year or less. Since December 31st, 2020, their assets have been reduced from $1.8 million to about $860,000, a total reduction of about $945,000, so not heading in the right direction there. Our liabilities, and they use their liquidity for this, so this is kind of a good thing, have increased from $244,000, you can see right here, to about $463,000 that you can see right here. So they're increasing their spending, the assets are dropping. We expected that, though, it's okay. And then we've added $6 of preferred stock, and our total stockholder equity, or deficit if it's in parentheses, which it's not, has been decreased from $1.56 million to slightly under $400,000 for a total decrease of $1.16 million. So we're not looking good on the balance sheet, but we do have good news. Hang in there, we're about to move to the income statement. Now, like I said, we have good news. We are moving on to the income statement. These numbers are as is, not specified otherwise. At the end, or in the same quarter in 2020, we did $0 of revenue. We know we did that in Q4 2020 as well. This quarter, we turned our first revenue. So that's a good sign, guys. You know, I am genuinely cheering for y'all here. Revenue improved from $0 to $156,000. It's not much, but it's something, which y'all needed. That cost us $104,000 to acquire, leaving us with a gross profit of $51,000, a little bit more than that. After you take out all of our operating expenses and whatnot, we are left with a net loss of negative $1.4 million. So not looking good there. That gives us a profit margin of negative 920%. But before this quarter, we were not able to calculate profit margins because you cannot divide a number by 0, and we didn't have any revenue, so we never had a profit margin. So that's a positive depending on how you look at it. Our shares equate to this, and that's pretty much all we've got for the balance sheet and the income statement. So we're not looking great. My jaw is not dropping through the floor just yet, but let's continue. All right, so starting with our debt to asset ratio, that measures total liabilities divided by total assets. That comes out to 0.54. So that is way up from last quarter. We expected that as we started to spend more money and create new liabilities for the company, which is needed for growth. It's okay. But anything over 0.5 is typically seen as a riskier investment. I go over that in other videos. I'm not going to go too in depth here. Our current ratio, which measures current assets right here divided by current liabilities right there, is 1.86. Anything over 1.2 is typically, seen as healthy, but a company with a balance sheet as small as HUMBL, you'd like to see something very high. They're not Berkshire Hathaway. They're not going to have, 1.8 or 1.2 and just be seen as like they're in great standing. They were at 7 last quarter, so they've been spending a lot of money. We understand that that ratio is going to fall, but just something to keep an eye on. That number is falling, and I would not be comfortable at 1.86 with a balance sheet this small. Let's go up here. Let's look at our book value per share has fallen from, you can see right here, was last quarter. It's like 16. I don't even know how to say this number. Sorry, I went to school for history. Ugh, stupid me. Versus this quarter, you can see it's been reduced to about a quarter of what it was last quarter. And that gives us a price to book ratio, which measures current stock price divided by book value per share. This is a controversial metric. I like using it, but you can see it's gone even further against our favor from 1800 to 2234.34. So the ratios are not looking good for us. Really, the only thing that I see that's gone good for us this quarter is that we've created revenue for the first time. And I'm not saying that to make a joke of it. Legitimately, I told y'all last video, that you need to make sure that you're creating revenue. This company cannot stay alive with no revenue, even if it is brand new. Now, to quickly address the comment from earlier that this company can't be expected to have revenues because they're a brand new company. I totally understand that. I come from a startup world, which is why I know that pre-revenue companies never, ever get billion-dollar valuations, which is why I know that the market cap is too high and the price is too high. And that's why I knew at 290 it was going to fall, and I think at 90 cents it's going to keep falling too, guys. I'm sorry to break it to you, but they don't have enough revenue and enough assets to justify a price this high. That's all it comes down to. Really quick though, there was something at the end of this report that was pointed out to me from a TSNP that I would like to address as well. So the excerpt goes as follows. Between the growth in revenues by fees generated by HUMBL Financial and through sales of merchandise in HUMBL Marketplace from April 1st, 2021 through May 16th, 2021, as well as from proceeds received from convertible notes and equity investment, the company's current cash position has grown to $4,538,337. Now, that number looks pretty sexy until you dive into it and you realize that that number comes from, let's remember, their previous asset balance was $860,000 at the end of Q1. That's March 31st. And so since April 1st, they've issued $4.1 million in convertible notes to 3 different investors. Now, convertible notes are not a typical investment. They basically give the company debt that they need to pay back unless the person who lends that money would like to redeem their convertible note for the share of the stock or the set shares of stock at a certain price. So it can be a good thing, can be a bad thing, but it's not risk-free like investments. So that it comes out to $4,103,250 between 3 investors. When you add that with the previous asset balance of $860,157, that gives you a grand total of $4,963,407. So let's go ahead and subtract their current balance that they advertised at the end of that statement of $4,538,337. And you find out that from April 1st, 2021 to May 16th, 2021, they already spent $425,070, which doesn't look nearly as sexy, does it? So that's all I've got for you guys. My jaw still attached to my face somehow. It has not dropped to the floor. I'm just playing with y'all, not trying to nudge you, but the company doesn't look that much better than it did the end of Q4. I wish I had better news again. I hope you guys make money. I hope I look like an idiot. If I look like a prick, if I look like a jackass, tell me in the comment section below. I love reading the comments. I genuinely laugh when I get the mean comments. If you found this helpful, let me know in the comment section below. If you want me to do another company for you, let me know in the comment section below. And as always, please, 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 if you appreciate the hard work, I'm at the office again at 11 o'clock at night, about to edit this for you so I can get it out by tomorrow. Smash that like button. Don't just smash it. Smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every time we drop new videos, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks, except for some days. Like the past month or two have been brutal for everybody, so those days are excluded from that statement. But yeah, that's all I got for y'all. So wherever you're watching this, have a good day, have a good night, whatever time it is there, just have a good time in general. Spread some peace, spread some love. The world needs it right now. And I will see y'all next time. Good night.